Pharma major Dr. Reddy's in its Q1 earnings report recorded improved margin and also gave upbeat product launch guidance as well. In our Ideas for Profit today, I'll discuss whether the company warrants investors' attention post the Q1 results. Well, Dr. Reddy's sales increased by 15% on a year-on-year basis. That was led by broad-based performance in Europe, in North America, as well as the emerging markets and the pharma ingredient business, which was partially offset by the India business. Now, sales of North America business was driven by the new product launches and also the favorable forex movement, offsetting the secular price erosion trend. Now, company sustained the market share for key products such as Suboxone, the most popular treatment to fight opioid epidemic, as well as Toprol XL, a beta blocker used for the treatment of chest pain and also blood pressure. Now, revenues from Europe, say 8% of the sales is what is contributed by that continent, grew by stupendous 48% year on year, and that was primarily on account of the better volumes, new product launches, and that was across the countries. Now, domestic business was impacted due to lower prescriptions generated and fall in the patient footfalls in pharmacies or hospitals on account of COVID-19. The gross margins were up about 437 basis points due to the favorable product mix and also the forex benefit, which partially offset by price erosion seen for US and Europe businesses. Now, however, EBITDA margin was impacted due to the higher SG&A expenses, primarily attributable to the higher freight cost on account of the shortage of carriers for shipping the goods from India. Now, net profit was impacted by higher effective tax rate of say 34%. Now, this was due to the completion of tax holiday for one of the plants. Now, here, however, the management is clarified that the tax rate for FY21 is expected to be in the range of 25 to 27%. Now, in the context of recent executive orders also given by President Donald Trump for the pharma sector, the management quite clearly has indicated that it should not really impact the generic players like itself. In fact, having said that, the normalized single-digit % pricing erosion for the company's US business is still expected to continue and definitely must be on the watch list. Now, additionally, incumbent government's focus on localization in the USA is expected to remain a relevant factor for the foreseeable future as well, though the company awaits some clarity on this aspect. Now, as of 30th of June 2020, the company's 101 generic filings are pending for approval. This includes 99 ANDAs and 2 NDAs. So, ANDA and NDAs are data-backed applications submitted to the US FDA for generic and the new drugs respectively, their applications. So for the current fiscal year, the company plans to launch 10 to 25 products. It is more than 50% of the filings are in the complex opportunities, and the new launches are also expected to be in the similar space. Now, during the quarter, the company also launched 6 new products. For the company, the R&D expense has been in the range of say 9 to 14% over the last 6-7 years. In the current fiscal year, the company expects the R&D expense to remain in the vicinity of say 9 to 10%. And while this is highly uncertain time for even for the pharma industry, given the disruptions in both supply and demand side, commentary on few of the critical drivers of the business definitely adds to the conviction on the company. Now, key drag for the company is definitely India business, and that remains a risk to definitely watch for all the investors. Its valuation is relatively expensive at 14.8 FY22 expected EV to EBITDA. However, the near zero net debt to equity is comforting. Now, having said that, this space has higher risk for legal and regulatory challenges as well, which investors should take note of. In this context, the key product approval timelines such as Nuvaring and Copaxone in the US needs to be watched as well. Overall, accumulation of this opportunity is advisable only for investors with high risk appetite.